And we're back.
We're back.
Back
Go back.
with another edition of Ashram Hours. I'm hesitating because I think you're on mute, Sid, but I'm not sure why. I saw your mouth moving and I didn't hear your voice.
Can you hear my voice now?
I can't hear you.
You can't hear me?
I was hearing you moments ago. That's weird.
I think you may have a headphone
you know what
problem.
I did? I have the mute. Yeah.
Hear.
There you go. I had the site muted from last week's post. Okay,
Yeah.
What's up, guys? Welcome back. We've got some great updates for you today. The Fed just cut rates 25 bips, which was a foregone conclusion, coming in about 98, 99% likelihood. So not much news there.
On what can they base that likelihood? I thought this is famously like a Jack in the Box, where you turn the crank and you have no idea. How come this time we were so certain?
It's something to do with positioning in the market. I don't have the exact answer offhand, but it's like bonds and leverage and options. I don't know. It's basically like the market is pricing in a basis cut, and they're pricing it in so aggressively that then someone can deduce that this is the probability that it will happen based on the wisdom of the crowd, I guess.
It turns out that the bond market was poly market all along.
Yeah, maybe it's bonds. I honestly, I read about it last summer where it's like, this is how they determine the probability. And it's kind of, it's just around the market pricing things in. Wisdom of the crowd knows all. So that is exciting. We've got Powell speaking in half an hour, probably coming out to say good afternoon. I looked at the poly market today on that, and it's just like mentions of the word inflation, and there's a market for 40 plus, 50 plus, 60 plus. It's going to be fun. If I had no job, I would love to just sit on the couch with poly market open, one of these prediction markets, and just drink some beers and then just gamble on the things he's going to say. I think that would be the fun way to watch that, because otherwise it's really boring and really annoying. But the bigger thing today and this week, we'll just touch on this because everyone's probably wondering about it, the market, is Fed talking points today. If he's super hawkish, then that's probably going to mute the cut. And if he's dovish, it's going to be nice. So we'll keep an eye on that, and I'll be keeping an eye on it. And then tomorrow, President Xi and Trump are going to chat and talk about deals, talking about rare earth metals and all the stuff. So I imagine today could go down as a nothing burger in the realm of price action, because there's like the bigger elephant in the room is the tariff talk with China tomorrow at maybe 3 p.m. I don't know. I saw some flyby headline earlier. So, this might just be a muted afternoon as far as the big trend people want to see. We're just in Chop City right now. Those are all the things I know. I'm not doing the deep market analysis that I used to, so I only get that much information. Just if it's on Twitter and it's people I follow that are smart. Macro Kruger is probably my favorite macro guy. Is a buddy of mine, Alex. Shoot him a follow. But yeah, other than that, how are you?
I'm well. You got me curious right now. I'm looking at the parabolic rise of the S&P 500, thinking about interest rates. I had Japanese barbecue last night, or at least that's what it was called, where you get the raw meat and then you cook it yourself.
Oh, Korean barbecue.
Okay, yeah, it was Korean barbecue, but Japanese. They were
okay.
I made that
Korean style Japanese barbecue.
Called it Korean when I was there, and got some scowls. Okay, barbecue, Japanese style. They did have kimchi. I thought that was odd. Anyway, touch of food poisoning, I'd say today. A little indigestion. Did not cook the raw meat correctly. I'm not a professional.
That's 2 times in 3 weeks, sir. You need to get a nutritionist.
Yeah,
first be safe and healthy.
Now I'm just gonna go back to protein shakes and only protein shakes.
Yeah.
Never done me wrong.
Nope. Can't go wrong. Pretty boring, but they do work. They do work well. I've been hooked on friggin' Uber Eats lately. I've been just fiending. Like each evening, I'm like, what's it going to be tonight? It's not a good habit. I'm not eating garbage, but it's expensive and it's stupid. My accountant does not enjoy. Anyways, let's talk
Sent
samsara.
you a big jug of protein powder in the mail.
I do have one. Yeah, I have one in my
all you
cupboard.
need.
I have one in my cupboard, but I only remember to take it on workout days, which is a few days a week, and so the other days are the days I need to solve for. But
I remember being introduced to crypto so long ago, and I went to some founder investor's home, and he was like, "Let me, take you under my wing, talk about this." And I opened his fridge, and it was only Soylent, those bottles of protein shakes.
Yeah, I used to get those.
And I was thinking to myself, that'll never happen to me. I'm going to enjoy cooking. And lo and behold,
I forgot about that. Yeah, I forgot about that thing. I used to order that. I'd get a case a month, and they had different flavors, and it was just a nice quick grab when you just wanted to not be hungry but didn't really want to make food or eat. Yeah, I don't know. Now I kind of want those again. They were nice and relatively healthy, I think. It's really hard to tell nowadays. There's a lot of things that are proved to be feeding children that probably shouldn't be. You have to do a lot of research, but we still eat Ritz crackers. So there goes the judgment train. It's hard, man. It's hard. I try to be healthy and tell my lady, I'm like, honey, there's so much processed food in our pantry. She's like, yeah, you can go grocery shopping. I'm like, yeah, fair enough. I still want you to do it. Just do it my way.
Yeah.
Anyways,
just like Diet Coke and Zen and protein shakes. Enough about me.
Yeah, I've got my Canadian Zin now.
What's it called? Sonic?
Zonic. It's better. Look, it's a step in the right direction. Okay,
it's so better Canadian Zen.
Yeah. Well, the Canadian thing is you have to buy it at the pharmacy, and you can't buy it at regular stores. So there's like, in classic Canadian fashion, there's this weird monopoly on it. I don't know who the Zonic company is, but they've cornered the market. You can only get it, and you can only get it from one place, and you can only get that one kind. Anyways.
Yeah, when I visited you in Canada, we swung by a smoke shop because I was fiending and they didn't have any.
Yeah.
And then I looked at the guy and I was like, really? You don't have any? And he's like, okay, 1 second. And he went into the back room and opened a safe and had some contraband Zen.
Yeah. Well, there's reserves. There's reservations around here that I heard recently. You can get it. My buddy's like, oh, just go online. You can order from the reservation. I'm like, oh, so they do have Zen in Canada. Just not anywhere you would think to look. Enough about all that. I'm really excited to talk about Samsara. We've got a lot cooking. We've got a few new things to talk about and something entirely new that I've got permission to speak about today. So I'm really excited to get into it all. We're going to try to cap at 45 minutes. I know a lot of people will probably want to go watch Boring Old Pal, but for those of you who stick around, you're going to get some juice. So I'm going to start with the age-old question. How's Samsara going? What's the latest? I saw that you were site down, which usually is a good sign.
As we talked last time, a decision was made to trim the fat, simplify it. There are a lot of features that seem like a good idea. They add more flexibility, more degrees of freedom into the system, but they ended up detracting away from the core value proposition of the whole thing. I'll give you an example. One of them was how to divide up revenue. So Samsara, it's an open platform. It bootstraps its own liquidity. It doesn't depend on liquidity providers the way virtually all other DeFi protocols do. Almost always there's a buyer, there's a seller, and there's a market maker. There's always this third party who's making things possible, and they need a kickback to get stuff going. And you run into a problem with this over and over and over again, which is how do you incentivize the third party? How do you cold start liquidity for a brand new protocol? Anyway, Samsara doesn't have that. You just have buyers and sellers, the end. The protocol itself is the counterparty for all the trading. You don't have a third human that needs a payday. But it generates revenue. So what do you do with all of the revenue if you don't have to pay it to a market maker? Well, it goes to the traders. It goes to the users. It goes to the token holders themselves. Long wind up to say, for a while, the idea was to split revenue between the people who buy the Samsara tokens and hold them because they're just using Samsara. Secondly, split some of the revenue to the Nirvana governance token holders. So they're always receiving a share of revenue derived from this platform, because that is the governance token of the entire ecosystem. And this is an example of something that made sense but was an overcomplication. And so we've done away with revenue going to samsara traders themselves, so that we can direct all firepower just to the governance token. And then also to the perpetual floor raise feature in samsara.
Which is kind of like giving it to the traders, because if you're
It
holding
is.
that token, your floor ticks up, your credit expands. And that's an interesting point that I want to make sure is clear, is the yield is not leaving the platform. It's just coming out in a different, much simpler way, right? Instead of having this karma token that's a little different for every market, you now just have all that going into the floor, which lifts all boats. And I think that's actually a really nice simplification, and it also boosts prana's participation level. So I love the change. I'm really glad that you bid it and decided to remove those things. And the nice thing is, if we have 6 to 12 months of data and it's like, oh man, like these karma tokens would be yielding so much and it'd be such an attractive thing and we have demand for it, it's available. We could always theoretically add it in, but once it's in there, you can't take it away. And that's an important distinction here for like making a decision like that.
You're right. Yeah, that's a good point, that it's a more elegant way to return value to everybody, to just let the revenue go into raising the floor all the time. So when people are selling, when people are buying, when people are borrowing, revenue's being made, and that goes into the floor. When designing a system like this, you're trying to come up with something which is stable, something which is fair, something which is rational, something that can endure. And you'd start thinking of, well, just add more variables into this. I'll add more degrees of freedom. I'll add more ways that revenue can move around so that people can dial this in through governance. But oftentimes simplifying things makes it better, makes it more stable, makes it more durable in the long term.
Mm-hmm.
So it's getting quite close. Very soon, we will create a deployment of it on mainnet, but using fake faucet tokens. So you have a demo of it on mainnet. Right now, there's a demo on DevNet, but for most people, it's difficult to get a hold of DevNet gas tokens, set up their wallets to interact with DevNet. It filters out a lot of would-be experimenters. So put the thing on mainnet. It's a lot easier to use. Have faucets for fake tokens, like fake Bonk, fake ZBTC, fake whatever is on there, and that people can play around with it there much more easily.
Mm-hmm.
And then we can have demonstrations with these fake tokens that the floor goes up and it doesn't go back down, just as we did with Nirvana, where we would actually try to break the system, actually try to penetrate the floor through a massive panic sell-off, and see that the math does in fact math, and the floor is what it says it is. Yeah, you've been running into this, explaining to people how this works, and they'll say, oh, so what, you have a bot that's infinitely bidding at the floor? You have something that's coming in to defend the price? And that's telling that people think of it that way. Like, surely there must be some bot bidder that's trying to like buy and burn the token.
Which lends like nervousness to the idea that, well, bots don't always function the way they're supposed to. Or, if it's a person, if it's a bot, if it's a separate entity that is simply holding onto some stuff and doing it. And it detracts from the reality, which is that this just is in one place. It just works.
It's just a math equation. Yes.
Yeah, it's math.
Yeah.
And that's such a powerful idea. And it's a big reason why I'm excited for everything we're building. So yeah, I love the crash the floor stuff. Not only because it was my idea, but because it just lets us prove things out without waiting around for natural occurrences of people selling into the floor. And then, you probably get a little bit sold in the floor. it'd be weird to see like the kind of thing we can generate with a campaign like this is going to be much more catastrophic, in the sense that we could try to get 80 to 90% of the supply of one of these things nuked into the floor, which that's a real stress test. And and we'll do a quicker one, right? We'll make like 3 days, have a fatter faucet, and just really run it up like crazy with Bonk or some other token, and maybe Bitcoin, whatever, ZBTC, and then just send it to Hades and watch the thing do its work. It's a beautiful design. I can't wait to flex it and kind of demo it. And then probably have another bounty on that, invite people in, say, hey, if you can sell below the floor.
Yeah, you get $40,000 and Sid's a live frog on television.
Yeah. And that should just be, add a little fun to it, a little incentive. People that say, hey, I don't think that's going to work. Be like, cool, now's your chance to break it. And then in the whole time, you get to stress test the system, which is another piece of this DevNet process. So it's a win-win-win. And that's probably coming in next few weeks anyways, once you get this new mainnet.
Yeah. And you're touching on the fact of application development that right now it's been soaking on DevNet because stress testing is important. And it's one thing to have an application that you're using internally or a few demo users are, but when the floodgates open on launch day and there are thousands of trades coming in per hour, per minute, want to make sure that the system is resilient, that it can handle that kind of throughput. So that's the stage that it's in right now. Getting ready for showtime, putting on the battle armor.
Beauty. And go ahead.
Another change I expect we'll see, maybe it's out now, maybe it's waiting in a pull request, is changing the names, the tickers of these tokens. Yes, from what they are today, AV tokens, short for assured value, a reference to the AVM, the assured value machine, this rising floor, making them more semantically aligned with what they represent. We call them DAT tokens, DAT tokens.
Digital Asset Treasury Tokens.
Yes.
Yeah, and that fits. It fits in people's minds better, and that's the choice. That's the reason we made the choice. And this was a concept that we had played with probably for the better part of 2 months now, maybe a month and a half, where we had a lot of conversations, and you and David and I were chatting, and it was like, oh, they're kind of like DATs. And I was like, oh, it didn't really land for me right away. And then the more I spoke about it, the more we talked about it. And then I got onto a few calls with partner projects and some old friends, founders of other projects that were already a big fan of what we're doing and knew about it. And then when I kind of took them through it, and my one buddy's just like, dude, that's it. He's like, that's the glue that takes this product that is not like any other real product that's out there. There's nothing out there that offers you these assurances relating to a floor, that offers, the borrow, lend, and leverage, non-liquidatable, interest-free. Like, the pitches that I was doing before, was a lot of it was kind of landing where it's like, oh, interesting. That sounds really cool. But like, why? Why though? Why? Where's the glue? Where does this fit into my mental schema? And then as soon as we started putting the lens of this on-chain digital asset treasury concept with it, where the DAT tokens represent the shares of this on-chain DAT, and the floor price represents the NAV, and you start thinking about things like, hey, the share price can't trade below NAV. You put that outfit on this thing, and suddenly it started to click with everyone, and they're like, oh, like that's fantastic. That's interesting. These shares do often trade below NAV, and that kind of defeats the entire purpose. They're supposed to outperform. If you're holding a ton of any digital asset in your treasury and people are buying your shares, they're doing so instead of just buying the base asset. So for example, think about Bitcoin, and MicroStrategy is the one we know best. If I want exposure to Bitcoin, I'll go buy some Bitcoin. Why would I buy MicroStrategy to get my exposure to Bitcoin? Well, I would buy it because I expect it to outperform Bitcoin. It's got a ton of Bitcoin. It's going to track the price of Bitcoin, but I think it can outperform it. Michael Saylor is very smart. He's all over it. He's running other things. He's generating revenue, Bitcoin per share, all that. And that's a really nice story. The reality is a lot of them do end up trading below NAV. And like you get with any meta that emerges, you have good actors and blue chips that emerge, and they're really doing it the right way. And then you have sort of like shitty like tack on attempts where they're just like, hey, look, we're a DAT, pump our shares. And if you look, and I don't have the charts, I'm not going to do a screen share today, but there's many DAT companies now that are pure DATCos, and most of them, I think, upwards of 80% are trading below NAV. And so it is a problem, and it's a problem that this product solves. But you got to tell the story in a way that aligns it there. And more and more now in the last 2 weeks, I've been sharing all the tweets I find in our marketing chat, because there are a lot of smart people coming out of the woodwork just singing our praises, basically just inadvertently singing our praises, saying like, man, this DAT model is kind of flawed. They're diluting shares to buy more assets. Oh no, now they're selling their base assets to support the shares, and they're reducing their NAV. And I don't know how all that's going to end, but I know that it won't even start when you do something on chain with us. And so that's a really interesting parallel that we've drawn, and we decided to just get after it, because one of the hardest things when you have an entirely new product like this is that it's hard to tie it to anything else people understand. So we found our thing, and that is the DATs, digital on-chain asset treasuries.
It reminds me of an oddity in the history of math, that in the 17th century, Newton discovered calculus. And at the exact same time, a couple countries over, Leibniz discovered calculus too, independently. They did it concurrently to each other by accident. And something similar happened with Samsara, where we saw the value of this model where you can amplify returns, amplify liquidity, amplify exposure through this vehicle that's not exactly leverage, but behaves like that. These derivative tokens that trade at a premium to the floor price, that can go up in terms of an asset denominated by what the treasury holds, is a very powerful model for you to go extra long on certain speculative assets that you're interested in. So we worked on Samsara. Meanwhile, that was the same thesis with these digital asset treasury companies. They were saying the same thing. If you can create a company that holds digital assets and creates a second asset, this share of the company, you should get the same kind of pseudo leverage effect. You're amplifying your exposure to the underlying. It's a very efficient way to get something like a multiplier, a force multiplier on your exposure. Both of us were working on this at the same time. And it, as you said, it did take a few months before we realized, hey, wait a minute, we have the same thesis, just with different language to what Michael Saylor's been doing all along. Had the same idea in the air, and it's a good one. The problem with DAT companies is unfortunately structural. It's not so much a problem with the thesis or the idea behind it. It's just how they're implemented, which is problematic. And the flaw here, which can't be avoided, is that a stock ticker, a share of a company, can go to zero. There's nothing that keeps it to be above NAV. It's entirely based on market sentiment. There's not some mechanism that guarantees that a share price is anything. The invisible hand is just going to push it around to be whatever it is. So there's this assumption with DATCos that the share price should be above the NAV of the company. After all, it's the market capitalization of the company's equity. So it should be at least the net asset value of the company. Why would a rational market do anything else? Well, markets aren't always rational. And so you'll see share prices free to move wherever they want to move. And as you mentioned, without naming names, they do go below NAV. The market capitalization of a company can be less than its net asset value. Who knew? It's exactly that possibility with DATCOs that Samsara makes impossible with the AVM. If DATCOs had one thing, they would be impervious to this, and that is the ability for shareholders to redeem their share as a share of the treasury. Let me say that again. If you could take your share of MicroStrategy and not sell it on the market, but redeem it for Bitcoin, redeem it for a portion of Strategy's holdings of Bitcoin, the arbitrage will keep that always at NAV or above. All you need is that redemption mechanism. Well, traditional capital markets aren't set up that way. You can't redeem your share. They're just traded on an order book somewhere. It's that missing piece that Samsara adds. It's that missing piece which makes this behave like a DAT would behave, but with a guaranteed floor. And it really is that simple. And it's something that blockchain makes possible.
I was just going to say, yeah, brought to you by blockchain.
I know, when you can make something an algorithmic program and you're not confined to the limitations of legacy rails, you can code this in. You can code in the redemption mechanism.
Yeah,
that's it. So we're calling them DAT tokens. It's a very, very close analogy. They're like DATs, just without these unfortunate structural limitations.
Yeah.
Which are no fault of the DAT companies. That's just how the NASDAQ works.
Yeah, and rather than talking about them being like DATs, and it's kind of like this, it's kind of like that, let's just call them that. They are digital asset treasuries. The things that back all of these DAT tokens will effectively be on-chain reserves or treasuries built up of whatever token that is backing that token, and each one will have its own. And then other people, third parties from outside of our company, can come in and champion these things. You know, somebody could come in and say, I'm starting a Fartcoin DAT and I'm going to commit all of my tokens to it. And we're going to drive this exogenous yield through the revenues we're doing. You know, that it's a playground for anyone who wants to run up a reserve on chain of one of these tokens. And it'll come with all the bells and whistles, including, you know, the credit facilities in that, and the leverage. People love leverage. People don't like liquidations. And so you get a bit of both. You don't get 100x unless it's a pip from the floor. You can have a little bit, and it's probably going to push it up. The point is, it's a new type of trading experience, and I'm really excited to see it. And one of the things that has been a major pain point for us through the last year, and I'm excited to talk a little bit about today, is access to the markets. And we just got confirmation from Titan Dex very recently. We're queued up. We're queued up for integration. I met with the founder a couple of weeks back at a meetup in Toronto, and we hit it off, and we finally got an application in, and we've got the code. And so I think in the next couple months, that's roughly where their queue is. They're very hot. They're exploding on socials as they started beefing publicly. I don't think they started, but I think Jupiter and some other dexes and meta dexes and routers and that, they're all going after each other. And I love that, you know, just good noise. And I think if you were the incumbent, I think Mert said something to the effect of like, maybe don't tweet about your, you know, competitors when you're like the number one, because it just tells everyone about them. But, you know, more and more people every day on Solana are hearing about Titan Dex. And so instead of sitting around waiting to surprise everybody with that integration, which is the other option, you know, show, don't tell. I thought people would appreciate to know that once that integration is live, and it'll probably be a couple months, then these AV tokens, or these DAT tokens and their underlying assets, all of this will just be seamless and available. And then as soon as their API gets picked up on places like Dex Screener, our liquidity will show up on chain, and it'll be so glorious. You know, Nirvana is what, $27 million in liquidity, or at least sitting in the reserve. I don't know how much of that would be seen on chain. I'm very excited to see how it reflects, but no more will you have to go somewhere and just see sad little 100K liquidity pool representing our token on chain. It'll actually just be the app. And this is for Nirvana and Samsara. Both will be integrated in Titan Dex. And I don't have a timeline for you. It's entirely,
tell me about it, man.
Entirely in their queue, but it is in their queue. I've confirmed with them, and that's It's
This has
great.
been so difficult over this last year that for a while, I haven't checked recently, but I was checking every day for the first 6 months after Nirvana launched. It was routinely, on a token, was more liquid than blue chip meme coins like Whiff or Bonk or Pengu or whatever. It's just, I was thinking of comparables.
Mm-hmm.
We were more liquid than them, but you don't see that on Dex Screener or other popular aggregators because aggregators are built on different rails and they just don't have visibility into the liquidity pool. It's funny, you're right there. You have all of this liquidity in a token account just to the side of these
It's
aggregators.
just not visible. Yeah, it's not visible.
Yeah.
Not
So
visible
that'll get fixed.
and not accessible, really. People are trading where they're trading, and yeah, we could say, hey, come to our website and trade it, but why not just come to them? And so that's what we're doing. Hey, that's been my goal since we spoke to Jupe in April. I think May, and that was a tricky process, and their queue, I believe, is closer to 12 months. And so very excited when Titan got back to us and said, hey, like a couple months time, should be good to go. So mild and yet exciting and big update there. Let's talk about AVM. The AVM is ready to integrate. It has been integrated. Xenon announced earlier in the year, and they've got a creator token platform, and they've got the integration, so all their creator coins have floors. And to me, that it's a smaller project. It was somebody in our community that was building it, and they wanted the AVM, and we said, hey, let's do it. And that process, when you went through it with them, was really enlightening. From what you told me, it's kind of like, oh, I figured out the pain points in doing an integration, and now this can be a smoother process. And since then, we've got a couple. We've got OddsFi, we've got Syndicate. That's 3. What was the 4th? Oh, Starbase.
Mm-hmm.
There's 4 now, building with the AVM that you take calls with here and there to walk them through how to do program wrappers and all the rest. And I'm excited to announce today, in a very leaky, sort of unofficial way, because I don't have tons of details, but there's like wait, and then tell when you have it at all. And then there's this urge within me to just let you guys know what's going on. And so I'm excited to report that there is a team of individuals who know us very well and are huge fans of what we're doing, and really wanted to see a launch pad for Nirvana, that just a classic, meme launch pad, utility token, governance token launch pad, can do serious ones, can do silly ones, all of them. And they always wanted that. That was something we always wanted, and they decided to build it. And so that is officially happening right now. It's in the very earliest stages. I think they're just settling in on a name at this moment. And then from there, the brand can expand. There's already devs building with you. And that's all happening. And it's actually happening quite fast. They're very adamant about having things possibly even as soon as Breakpoint, where they would just want to have an MVP ready. That's the bar. That's the goal. And so without getting into any more details, which I don't have and frankly aren't mine to share, I just want to let everyone know who's watching that it's happening. There's going to be a Nirvana Launchpad. And here's the cool thing. As anyone here has been watching knows, 15% of all the fees that run through the AVM from whatever builds to it, which now we have 5, 15% of all that goes to us, goes to the treasury. And with that, we plan to just unabashedly top blast ANA and stack it in our treasury and borrow USDC against it for funding. And this particular team is such a big fan of what we're doing, and they're so aligned with our vision for the future, that beyond that 15% that will be automatically sent to us, there's actually going to be platform revenue as well. And they're going to be taking 100% of that and using it to buy ANA and run the same treasury strategy that we're running with Samsara. They're going to be running that with this launchpad. So I cannot stress enough just how aligned that is. Very exciting. It's the exact perfect outcome for us with regards to like what kind of launchpad would pick this up. And now there's 5 different programs and platforms that will be running some form of value through the AVM, and that's just the beginning still. So very exciting stuff.
Mm-hmm.
And in a few weeks, when there's more to share, and the 2, 3, whoever on their team wants to join, we'll do a big old roundup with them, and they can take you through in much more detail. And don't even quote me on the 2 weeks. I'm just saying, when it's ready, we'll talk about it. They will come and talk about it. For now, I just asked permission before the stream. I said, can I just leak a little bit, because I'm excited and I feel like everyone else would be, and we should just tell them because it's definitely happening. And they're like, okay, fine. So there you go. It's premature, but there you go.
Yeah. See, Nirvana, Anna, it has one purpose for existence. It does one thing well, and that is store value. That Anna is designed to be the ideal reserve asset. Ideal in the sense that it's scalable. It can scale to the size of national sovereign wealth funds. And it stores value famously in its floor. Another way of saying storing value is that it always has liquidity. Liquidity is just a property of the token. You can always sell it because there'll always be a protocol that's going to buy it from you. That's what Anna does, and it does it quite well. Any other digital asset out there, any other speculative one, the price is, it's not coded in any sense. The price is arbitrary, and liquidity is the subject of how humans feel from day to day. Not so with Anna. So that project, that protocol, it's basically a public good, and it's out. What remains is to build an ecosystem around it, and that's where our energy has been these last few months. Samsara, basically a digital asset treasury platform, is using Nirvana's machinery to make this dream come true. And as you mentioned, RT, that the revenue from that just goes back essentially as a 100% royalty to Nirvana. It'll just buy Anna automatically, constantly, every 5 minutes. As soon as revenue gets produced on Samsara, it just goes straight into buying the Anna token. The end. It's simple. Buys it and holds it forever. Same thing is now going on with this open platform with the AVM, so that anybody can build their own specific products using this machinery. Samsara is but one for making these DATs. You had mentioned that there are some launch pads or things that resemble launch pads, other kinds of applications with their own spin using this platform code also. And same thing's going on. The revenue from the platform will be used to constantly buy Anna forever. I like the simplicity of this. We are not a hedge fund. We're not traders. We're not treasury managers. There's not some like foundation holding on to a bunch of these assets that has to make a fraught decision when to sell them, when to buy them, how to assign them for grants or whatever. None of that mess. Just take the revenue and buy Anna forever. So we build the Samsara project that buys Anna, build this platform, help teams build their product on top of it. That produces revenue to buy Anna. And any other project that gets created is going to have the same simple machinery where value just funnels back into buying and holding the Anna token, leading by example. That Anna is a reserve asset. It's a great place to park money and know what your downside maximally could ever be, and just ride it on the way up. So that's what's happening with all of this, and it is very exciting to see now 5 teams choosing to integrate on this just in the last few months. If we keep that rate up, then we will move closer to this dream of having it be a common sense thing for price charts in the future to have 2 lines on them. That's one of the things we're building towards. Just make crypto more safe, more sane, more rational. There should be a second line on every price chart.
Yeah, that's the dream. And then, every couple months, a new team of people, talented engineers or whoever else, kind of sees it and says, okay, we want a piece of that. And, can you give us the code? Can we build on your stuff? And the answer is yes.
Got a little distracted. I was watching Bitcoin move from like
You too?
112 to 109. And as I was talking about crypto being a more safe, rational place, I'm seeing this multi-trillion-dollar asset be this volatile. And I'm just like, yeah. We can do better than this.
Yeah. It's getting tossed around right now. Powell's speaking. I don't know what he's saying. I don't really think it matters. Like, I mean, certainly matters. I'm curious what he's saying, but
do you think this is a Powell event causing such
100%. Yeah. Powell is speaking. And so there's going to be a lot of knee-jerk moves. And, if we were going to go much higher in the coming weeks, typically around an event like this, you're going to get a little flush and kick everyone off the train before. So that's pretty normal. Yeah. Who knows?
Yeah. This nirvana model is simple. When you remove human market makers out of the equation and you just have a protocol with clear, consistent, immutable logic built into it, it makes everything simpler. It's everything simpler when you'll never have a liquidity crisis event, and everybody knows the rules of the game that they're playing. And it's a future worth building towards. It's a future worth building towards where finance is finally transparent. And if you choose to invest in something, if you choose to buy something, you should have a right to know how the entire system works, top to bottom. I think I got this bug from getting into software, and I was big into the open source movement, which had the same kind of thing, that if you own a John Deere tractor, you should be able to inspect the computer code running it. You bought the tractor, you should know what the code is on it. You should know how your thing works that you own. And this should be true of financial instruments also. You should know how the market making happens. You should know how the order flow works. And unfortunately, that's almost never the case in finance. I doubt that there's anybody who fully understands how everything works with this. But with Nirvana's ADM, you actually can. You can fit it all on a single piece of paper, how the market is structured. And that's just what I believe decentralized finance should aspire to. It should be in principle understandable.
Yeah. Well, and dependable, reliable.
Yeah.
I don't want to see what happened with Binance a couple of weeks ago happening to any of the assets I hold, and that's dependency on third-party market makers. And I was reading an interesting post from one of the market makers that talked about Binance's system not accepting their orders for like closed positions. So they were trapped in these massive positions that typically would be opening and closing and moving their bands of liquidity lower with price, and they all got stuck where they were. And that's why at a certain point, the floor just kind of fell out of it. Floor. It just tanked. I mean, things went below a penny that were trading for a couple bucks, and and there wasn't a lot down there. There wasn't much action going on. It was just like, hey, we're gonna close and force close all of these longs. Oh, there's none left to force close. Okay, ADL kicks in, auto deleveraging of shorts, and that's just closing shorts, which brings it back up. And within 15 seconds, it was like it never happened. The only evidence of it having happened is the wick that's left on every chart from particularly the Binance perps and any that use it as an oracle. That's a very problematic centralized point of failure in the system, because a lot of different exchanges and venues, they use Binance oracles to essentially price their assets. Further to that, they have a lot of markets that they have perps for that they don't even have spot listings for. And so you're entirely dependent on this system of market makers in that. And for perps, it works in the sense that people like to trade perps, and this allows them to do that. But I think the underpinning of a market should be a lot less volatile, a lot more reliable, and not as dependent on humans and their systems. So,
This
take
is
the code, take the
exactly
math.
it, man. That what 10, 20, 30 billion dollars was liquidated in that
20.
20, yeah.
Well, they're reporting 20, and there's estimations that are probably it's just higher, but
Exactly to the point. No one knows, and more importantly, I've done my research over the last week. I still can't comment with confidence on what happened. I don't
yeah.
know if more than 10 people know what actually happened that day.
Or
It's
why,
exactly
or
the
why
point.
it happened. Why was, and so I don't have it on me. I saved it though. It was a really interesting write up, and then it was deleted by the author and saved by
Right.
other people. And there's this idea like, why did he delete that? Did Binance reach out and threaten legal action? Who knows? But they reported that this is kind of like the walkthrough of the hours and minutes leading up to the event and then through it. And when you think about congestion on that system, market makers like this with that type of account are supposed to have priority to any other people. So congestion should never be an issue. They always get first. They're always able to close and de-risk and open new ones and just keep the market functioning because they play that role. So they should have priority access to the throughput. And said something like 200 orders in a row were rejected by the system, all just in seconds, just like it just wasn't taking anything. And that's in that moment, that's why everything just went, whoa, like it just broke. Now, why did that happen? How did that happen? Was there any nefarious actions? I don't even necessarily think there was. It was just like the system didn't work the way it was designed for whatever reason, but it was designed with that flaw kind of embedded in it clearly, because it's not the first time. I think it's the first time it's happened to that degree. I mean, certainly from a nominal point of view, but like for it to kind of break in that moment, the site being down, the front end being down, people not being able to place their retail orders, that's pretty normal for intense moves. For market makers to not be able to function and their algorithms to essentially stop working, that is not normal. So we'll see. I have a feeling we'll see some lawsuits and news headlines come out of this in the coming months, because there's a lot of major damages done to large firms that essentially went there to provide a service and they got completely run over by that faultiness. So something to see. Anyways, a conversation for another day perhaps, but that's the dream here, is like, can we build something new, more transparent, more on chain, done differently, and essentially just remove that dependency that is problematic for a lot of reasons. And so, and a big piece of that is like, that's cool, but let's make it accessible to everybody. And that's where things like the Titan Dex integration come in. Something that's always been high on my list of priorities. And for a long time, it felt like Jupiter was kind of the only show in town. That's where I go to trade things on Solana. That's my on-chain hub. And so I'm very excited to see other ones coming online, performant ones coming online, and just giving everybody more options. You don't want to run the same Binance playbook on chain where there's one venue for everything to have happen. What if that goes down or something goes wrong there, right? So I think more is better with regards to variety, and I've been really impressed with what I'm seeing from Titan Dex. So couldn't be happier to have them queuing us up for integration at some point.
Mm-hmm.
And with that, go ahead.
Just yes, more is more.
Yeah, more is more.
Decentralization is what we're about.
That's it. So Samsara soon. More details on Launchpad, and really they're just going to come from the team. I'm going to let them say their piece. I just wanted to let y'all know that is happening, and I'm very excited about it. I couldn't hold it in any longer. So until next week, I believe we'll be back on next Wednesday. Excuse me, possibly with a guest. We've got a few in the bushes nearby that are waiting to come on, so we'll announce that as soon as it's finalized. And thanks for tuning in today. It's been great.
Thank you.
Okay, time to go look at some owl highlights, see what all this noise is about.
Yes.
Bounce is coming in. So